Man, do I love real estate. If you're not making money while you sleep, you're going to have to work forever. If you're looking for true financial freedom and a consistent income stream through real estate, you've come to the right place. Welcome to my channel, your dedicated resource for mastering the world of multifamily real estate. Today, we're diving deep into why this specific asset has consistently proven to be a powerhouse for investors, proving both significant growth and steady streams of income. Let's get started. What makes multifamily real estate different from other investments? It comes down to a few key factors. First, let's talk about cash flow. Multifamily properties consistently and reliably have cash flow. This means the rental income from those individual units can cover your expenses. And most importantly, generate a consistent profit for you. Think of it like a steady paycheck coming in every month. On top of that, multifamily tends to fare better even during economic downturns compared to other investments like stocks and bonds, simply because people always need a place to live. The stability is a huge advantage. Next up, appreciation. Just like other real estate, multifamily properties tend to increase in value over time, offering a potential of significant capital gains when you eventually sell. But here's why multifamily gets even better. You can actively boost the appreciation through value-add strategy. This means making smart property improvements, maybe updating units, adding amenities, or fixing up the aesthetics. These improvements attract better tenants and allow you to increase rental income, which directly enhances the property's overall value. And finally, we often overlooked but incredibly powerful tax benefits. When you own multifamily property, your rental income is typically taxed at a lower rate. Then you can deduct many property-related expenses like maintenance costs, property taxes, insurance, even mortgage interest, and significantly reduce your taxable income. Plus, with the recent change in the tax code, 100% bonus depreciation is now permanent, and qualified properties placed in service after January 19, 2025. This is a secret weapon to keep more money in your pocket. Now, let's get to the question everybody's asking. Is passive income truly achievable through multifamily investing? The answer is resounding yes. Here's how it works. The rent collected from the tenants cover your expenses, then your mortgage, your property taxes, your insurance, and your maintenance. Ideally, after all those expenses are paid, you're left with surplus. The surplus is your passive income. Now, let's get it clear. It's not zero effort. No investment truly is. But compared to running a traditional business or even maintaining a single-family house resident yourself, multifamily investing is significantly less hands-on, especially when you have a good property manager. They handle the day-to-day operations, tenants, issues, maintenance, toilets, allowing you to free up your time. So what does this consistent passive income actually mean for you in your life? Well, it's truly transformative. When talking about achieving financial freedom, the possibility of early retirement, simply having the means to pursue your passion without a consistent worry of where's your next paycheck. Ready to learn more about multifamily and how it can transform your financial future? In our next video, we'll compare multifamily to other investments to see what stands out. Don't forget to like, subscribe, and hit the notification bell. Thanks for listening.